Hello, welcome to another Ideas with Purpose webinar featuring Thinkers50 shortlisted thinkers, brought to you in association with Executive Networks, our talent award partner. I'm Des Dearlove.
And I'm Stuart Craner, and we're the founders of Thinkers50, the world's most reliable resource for identifying, ranking and sharing the leading management ideas of our age. In November at the Thinkers50 Awards Gala 2021, we will be announcing the all-new Thinkers50 ranking of the world's leading management thinkers and the recipients of the Thinkers50 Distinguished Achievement Awards. All the information about our event in November can be found at thinkers50.com. It would be fantastic if you could join us.
Last week, we announced the shortlist for the Thinkers50 2021 Award for Ideas into Practice. So please check that out on the Thinkers50 website. And today we're delighted to welcome one of the shortlisted thinkers for that award, Dambisa Moyo. Dambisa is the author of, hi Dambisa. Dambisa is the author of Dead Aid, How the West Was Won, Winner Takes All, and Edge of Chaos.
How the West was lost even.
Sorry about that.
Dambisa's latest book is How Boards Work, which addresses fundamental questions such as the key responsibilities of a corporate board, the levers and limitations boards have to create change across the business landscape, and whether corporate boards remain the ideal governance structure in the 21st century.
Big questions, and ones which are sure to ignite a debate. And Dambisa is certainly well qualified to make a judgment on the performance of the world's boards. She's worked at the World Bank and Goldman Sachs, and since then has been on the boards of a number of multinationals, including Barclays Bank, Seagate Technology, Chevron, and 3M. Dambisa, welcome. Can you remember your very first board meeting?
I can. First of all, thank you so much for the opportunity to be here and to shortlist me. I'm delighted to be considered amongst many other amazing authors and books. And thank you so much. Wonderful to see you both. I can remember my first meeting, partly because after numerous years of trying to get on boards, I couldn't believe that I was finally there in what I thought was the room where it happens. But it really was quite a stressful experience because on the one hand, I felt these are coveted seats. There are usually only 12 people in the boardroom. And so in that respect, I felt like I did need to contribute, having, of course, had the opportunity to read the papers and to have discussions before I joined. But on the other hand, I had been given very strong counsel by a very wise friend who'd served on boards for many, many years. And he was already in his late 80s. And he said to me, it's the worst thing to do, or the worst thing to do is to go to a board meeting, your first board meeting, and to open your mouth because you know absolutely nothing. And it did remind me of something my grandfather always said, when a stranger comes to the village, they must learn the dance before stepping in. Otherwise, they may spoil the dance. And so in that respect, I tried to shut up, even though I had some comments. And it was quite a torturous experience, but in many respects, also illuminating.
And we didn't say, thank you everyone who's joining us today. Just send in your questions for Dambisa along the way. Let us know where you're joining from. So Dambisa, how long did it take you to learn to dance?
You know what? I'm still learning. One other very wise board member, friend of mine, just told me, and he's in his 80s also. He told me just a few weeks ago, Dambisa, one thing you need to understand about being on boards and being a business leader is that you're always going to be surprised. And I've been really struck by that, but in a sense. But he's right. There's never a period of calm. My career on boards has been bookended by a financial crisis. I joined my first board when I was in 2009. And, here we are having this conversation during the middle of a pandemic with lots of questions around inflation, around work from home, etc. So there'll always be surprises, rise of China, technology, digitization, mental health, etc. And I think that in that respect, it's a place to continually learn and not expect a sort of a dull moment.
Talking of surprises, in a way, I mean, it was a surprise to us to see that you'd actually written this book because it's a bit of a change of direction for you. I mean, we associate you, with sort of talking about the global economy and globalization and, big macroeconomic issues. I mean, and yet this is a very practical, hands-on book. What made you decide to sort of shift your direction?
Well, interestingly enough, it's not really a shift in direction. In fact, chapter 4 of this book, How Boards Work, actually is devoted to the big challenges that boards face. And a lot of what you just outlined there, growth and et cetera, are massive issues that affect what boards are doing and how we set the agenda and think about long-term prognosis for the survival of these different organizations. But you asked me what motivated me to write this book, and I would argue that there were two things. One was I really felt that there was an important need to reassert the important role that corporations play. We certainly since 2000, so a good 21 years, we've lived in a world that's been quite anti-growth, anti-capitalism, anti-corporate. And I felt that that there was a real need, having served on the board of a company that was as old as 360 years old. This is Barclays Bank, but many others that are over 100 years old. There was a need to basically re-articulate the fact that corporations help to create jobs. They provide a tax base to fund public goods like education and healthcare, but also they are partners with government in delivering innovation, which we've just seen really done in a phenomenal way with COVID. The second reason, really quickly, as to why I felt this book was necessary now, I had been teaching a seminar class at a number of universities, but one in particular at Harvard, and I was quite shocked that people didn't really understand or know what the mandate of a board is. And I think this is really an important point to stress, given the fact that the mandate is expanding very rapidly from just overseeing strategy and picking the CEO into ESG. And yet people didn't know that that was the mandate, and they didn't also know what levers the board has to effect change.
And are there huge differences in boards as you travel around the world? I mean, you've encountered boards in various industries and various incarnations. Is there a huge difference?
So it's a great question, and it's something that I've thought a lot about. You're right. I've served in different jurisdictions: UK, US, Canada, continental Europe. I've served in different sectors: mining, energy, banking, fast-moving consumer goods. Yeah, on the margin, there are some changes. We know that German boards are two-tiered. They have employee representation. We know that in the UK versus the US, in the UK, the CEO and the chairman are split roles, whereas in the US, many companies have a joint chairman and CEO. And I think that what I settle on is that ultimately, yes, these things may have optical differences, but I think on the margin, it doesn't really materially impact the board mandate and the efficacy of the board mandate. And that's just been my experience. And it's been very interesting to see, how different or corporations in different jurisdictions try to make sure that to mitigate any risks of problems or missed opportunities in the sense of not having one model versus another.
Interesting, and you may well correct me here, but my understanding of where the term board came from goes right back to sort of the 1700s, when people would literally pitch up with like a door or something to make a makeshift table, a board, and then the people who were running the company would sit around it. That's the story I heard, whether that's true or not. But it does point to the fact that boards have been around a very long time. Are they still fit for purpose? Are they still the best way to organize ourselves and to manage very large multinationals?
I hadn't heard that story. I thought you were going to say something cheeky that relates to a board being B-O-R-E-D as opposed to B-O-A-R-D. What I do know from my research, and I talk about this in the book, is that the earliest boards were from the 1600s. And it's quite an amazing story about sort of the evolution of boards. To your question, I think that fundamentally with questions of governance, but also of the mandate of the board, but also the corporations writ large, we should always be open-minded about making sure that the organizations and the groups of people that support the organizations, in this case, the board, are fit for purpose. And I would argue, and perhaps people might not be surprised, I err on the side of these boards are still fit for purpose. However, and there's a big however, that doesn't mean that they don't themselves need to evolve. So having 12 people at the helm of an organization that provide oversight of strategy, that are charged with picking the CEO, and also thinking about these ESG issues, I think absolutely still works. But we still do need to invest in areas of improvement, tapping into technology, thinking about diversity, thinking about making the boards much more effective in how they engage with investors and stakeholders more generally, are all areas for improvement that I think boards must go through. Otherwise, they won't be fit for purpose in achieving their roles. So yeah, there's lots of work, and I don't want to make it out to be an end point. I think this is a sort of annual refreshment that boards, the best boards that I've served on, go through.
Alexander from Poland asks, what are the characteristics of a good, effective board? And I suppose from your experience, Dambisa, you've worked in a range of boards now. When it's working well, what are the characteristics of that board? Because they're only human after all. Their performance levels change from time to time. But when it's working well, what are the characteristics?
You know, Stuart, you stole my answer, because I wanted to mention that these are a group of human beings, and that comes with all the foibles and frailties of humanity. I mean, for me, I think the best types of boards are ones that are not ideological, meaning that there's a recognition among board members that these are complex organizations, hard to turn, and even when it's absolutely necessary, for the sort of the livelihood or the future of the organization, it depends on change. That change can be very hard to affect, because we're working in different geographies, across different cultures, etc. But other things that are really important are good judgment. Very often the decisions that boards have to make are made with minimal information, a lot of uncertainty. So on balance, we're trying to make the best decisions in a very, very challenged environment. I would say one other thing. The best type of boards are ones in which everyone participates. I think that because we're all human, people have different personalities. And one of the, I would argue, things that sets apart the best chairman or a chairperson from another chairperson is really those who really bring in talent and background and expertise of every board member in a very deliberate way, especially when we're having to address a big issue like succession of the CEO or an M&A transaction, or some other sort of what I'd say milestone in the corporation's livelihood.
Okay, we've got a question from Erica Lucas. This is a very pertinent question. I mean, I don't know where you stand on this. What can we do to increase female representation on boards? Are you a believer in quotas, or is that the wrong way to go about it?
Look, I think that there was a very compelling argument a number of years ago about the need for quotas. I felt, and I would not have made this argument. I wasn't a big believer in them, but I think that there was a very much more compelling argument to be made that we not only were we not seeing society represented in these decision rooms, but also it was taking too long to effect change. That's not the situation today at all. And, you know, if anything, I think that we've reached certainly not a balance, because the rooms are not 50-50, but we've reached a cadence, a discussion point in the boardroom where when looking for talent, it's no longer, more and more moving away from, oh gosh, we need to have a woman on the board for optics, or for, to send a signal that we're somehow doing right, for Blacks or for Latinos or Asians as well. I personally feel much better about where we are. 10 years ago, or actually 12 years ago, when I joined my first board, I was the only woman and the only person of color on all the boards on which I served. And that was going on for 3 years at least. That's just would be unheard of on the global organizations on which I serve today. And most of them are almost 50-50 women. Many of them have multiple racial sort of diverse representation. And by the way, this is good for business. How are you going to sell Coca-Cola or a Burberry jacket in Africa if you don't have people from these different regions or from different backgrounds to help understand cultural differences in what might sell or not sell. So, this is just good business. And I'm happy to say that the competition has gotten really tough. There are fantastic women candidates, but also minority candidates. And I think the message has gotten received loud and clear that it's only diverse organizations that are going to compete and succeed in the world to come.
Go back
That's very positive. I'm pleased to hear you say that. I mean, perhaps maybe it's the optics, but at the moment, we don't necessarily feel that. But it's good. It's good that you're positive and that's what you're seeing. Sorry, Stuart.
Can I just make maybe just add on a couple of points there? So first of all, I'm not at all saying that we've arrived at nirvana. There's certainly work to be done. But from the boardroom, again, going back to the point about having good judgment, it's not in my interest as a board member to fight discrimination with discrimination. I don't want high-performing white males to think that they cannot succeed in the organizations in which I serve. I do, however, want the best talent for us to win. And that best talent doesn't only come in one shape or form. And so when I'm interviewing candidates, I don't want to say it's immaterial what they look like, but I would certainly say, because there's work to be done, these corporations have risks, they have financial responsibilities, they have operational efficiencies to be gauged, they have strategic decisions to make. I'm much more driven by probing those aspects of the candidate. And frankly, I don't need to. I know this sounds a bit cheeky, but nobody should be doing us any favors, because I don't need to drop standards. There are women and people of diverse backgrounds who can answer the questions and can add enormous value to these companies. And that's what's most important to me, that we have access to those people and that we're able to evaluate them. And that's, I think, more and more the world that we're in today, and hopefully long way to continue.
Absolutely.
Dambisa, can we go back to one of your previous answers? You talked about you making decisions as a board with minimal information at times. And that must be a very strange situation as an outsider to the company, because you're not a full-time employee of the company. You're not immersed in it in that way. That must be a big challenge, because you're kind of making decisions in the dark to some extent. You really are exercising your judgment.
Well, you are, and of course, we rely heavily on management. Who are they? They're on the day-to-day basis at the coalface, making decisions, lots of minute decisions that add up to the organization being a going concern and moving forward. But to say that we're operating in the blind, I think is not exactly correct, because one of the reasons board members, I believe, add value or should add value is that they're out there in the world absorbing and maybe tapping into networks that management on a day-to-day basis can't access. So maybe we're in public policy rooms, maybe we're in academic rooms, maybe we're in different conferences. It's that knowledge and perspective that helps shape conversations in the boardroom. And so in that regard, I would argue that if anything, it's complementary. It's not taking away from what the management are doing.
And of course, we've just come through, or we are in the midst of, some people would say, this pandemic. I know you wrote an article for HBR about the sort of questions that boards need to ask themselves, in relation to COVID. Can you talk about that a little bit? Because obviously, talk about trying to deal with an unknown.
Yes. So yeah, you're right. I wrote an article for Harvard Business Review. I believe it was April or May of last year, really during fever pitch with COVID, high period of uncertainty. We didn't know what this thing was. We didn't know how it was going to affect people. And really, we had no visibility about when this whole thing would end. It was really important, I think, to separate the conversation, even though we were having lots of meetings in the board level and committees. It was very important to separate the conversation into two buckets. One was what I would call tactical issues. How do we survive? What does the balance sheet look like? Are people safe? Are we in touch with everyone? Do people have access to healthcare? How should we continue to block and tackle so we can survive in this volatile period? That was crucially important in the here and now. But there was also an important discussion to be had, and continues to be had, around, this is going to end. What does the company look like as we emerge? Don't lose sight of the strategic goals. How do we adjust those strategic goals to reflect this challenge that we've just faced? And there are so many strategic questions that are looming, that have come out of the fundamental shifts that have occurred, questions around globalization and the breakdown of supply chains and logistics, questions around work from home. How do we think about the metrics that we have established from the old type of working, people coming to the office? Do those things still apply if people aren't in the office 9 to 5, 5 days a week? How do we think about questions of inflation and digitization and technology? Is this going to be harder to manage people or easier? Mental health. There's a whole slew of things that strategically we need to think about as we emerge from the pandemic. So I think really those two buckets, for me, were really the guide for that article, but also have been a real compass as I think about how I try to contribute to the discussions that we have in the boardroom.
As an independent director, Dambisa, how do you maintain your independence? I mean, if you've been on the board of an organization for a few years, you must become part of the fabric and you really understand the culture. How do you maintain, but you're employed really to have that independent voice? So how do you keep that balance?
So it really depends where you are. In the UK, the regulatory environment is very clear. You only get to sit on a board for 9 years. And so, for example, my board tenure on the Barclays Bank board, I served the full 9-year term. It was very explicitly trying to address the issue you just raised. They feel that after 9 years, you're probably not that independent. I mean, in the book, I talk about the pros and cons of both of these models, but that's how it's managed in the UK. In the US, you're right that they don't have term limits per se. I mean, they have age limits. And in some cases, in boards, they don't even have that. So how do they gauge independence? How do they gauge value? Well, every year, and this maybe comes as a shock to some people, but we get evaluated by our colleagues. So it's a 360, we evaluate each other, but also more and more we get evaluated by the management team, who are ultimately we're there to support and provide oversight. So they also more and more get a chance to say, well, I think this person's adding value, this person is not. And I think in those conversations, which tends to be anonymous, but also managed on occasion by third parties, you get a lot more of a perspective and understanding on whether people's independence has been compromised. But look, if I may, dare I say it, also we're eternally tested on issues of independence because we have to deal with very hard topics like hiring and in some occasions firing the CEO, M&A transactions. I mean, you're in the boardroom having to make these decisions. That says a lot about independence.
When we were introducing the book and we were talking about the sort of some of these conversations, I liked the phrase talked about levers and limitations, and of course there are limitations. People forget that boards don't have necessarily the sort of sweeping powers. You're one of 12 or however many are on the board, and sometimes the only way to register your dissent, presumably, is to resign, is to step back if you think there's something going wrong. I'm not going to ask you for a specific, but have you encountered those sorts of situations?
Absolutely. For the 10-year tenure that I've been on boards, I've had a chairman die in office, M&A transactions, enormous fines, activists in the stock. It's just the list goes on. And each of those points, decision points, can be fraught with a lot of dissension and disagreement in the boardroom. I think if anything, you hope that high-performing teams have that sort of energetic debate. I mean, in the book, I quote something that President Obama said, that by the time something hit his inbox when he was president, it meant that it's very difficult, because if it were easy, somebody else would solve it. And that's very much true for the board agenda. By the time it gets to the board, it's a hard thing. It's very unlikely you'll get anonymity, in one fell swoop. And so I think, I know for a fact that, there's not a single thing I can think of that seemed obvious and was sort of only one right answer. These are finely tuned, finely balanced decisions that are being made. And in that respect, with 12 people around a room, it's almost a test in negotiation and helping people to try and land in a place of consensus. Even though people come with their own baggage and own perspectives and own backgrounds, which can cloud their views.
So
you mentioned, sorry, I thought Stuart was going to ask this question, but you mentioned high-performing team. I remember we worked on a book a few years ago, and the author was very clear that a board is not a team. It's another sort of entity. You shouldn't expect it, or at least I can't remember now if he was talking about I think he was talking about the board and specifically the executive team as well, and saying, it may not be a team, and often these are competing. It's more like a political entity. Like a cabinet.
I would love to hear more about that. I mean, if they're saying, first of all, I mean, to me, to my mind, the board is a team. I think very often people lose sight of the fact that the board has subcommittees underneath it: audit, risk, finance, nominations and governance, compensation, and that all of these subgroups have to work together in pursuit of making sure that the board is functioning, but ultimately that the corporation is functioning. To my mind, I mean, teams come with them with making sure people are in the right seats, that you've got the right people in the room in the first place, and that the agenda, which might seem easy to some people to set, is actually put together in a very thoughtful way, but that reflects what all the board members think of as being the most important and most urgent things that the corporation needs to be dealing with. So I'm not entirely sure why they might think that it's not a team. I will just add and say, I'm perhaps a little bit more open-minded to the idea that there are occasions where the board may inadvertently be pitted against management, in areas such as an M&A transaction or compensation discussions. But even then, we all want the same thing. We want these organizations to continue, want them to thrive. And just because there's a decision point that the board must take on comp or on promotion or succession or strategy, that might run counter to the views of management, doesn't mean that we're not a team. It just means that, to my mind, it's par for the course. It's making decisions and with the best amount of and the most amount of information that you can get your hands on.
I would have thought you alluded to it earlier, Dambisa, the hard to turn element in big corporations. So you're making very big decisions, but big decisions that you might not see. You might make the decision, you might not see any changes for a lot of board meetings before you see any changes. Isn't that frustrating?
It's not frustrating, because I think that I've gotten a cadence, being on these large global corporate entities for over 10 years, you understand that that's par for the course. Now, having said that, we are always looking at efficiency metrics. I tend, for my druthers, almost always end up on audit committees. Audit committees are full of metrics that we're tracking, not just financial metrics, but also operational metrics. And more, certainly from mandates coming from on high from regulators, we're going to be tracking worker audits. And I think each of these bits about productivity of capital and of labor and other areas, they do help us to think through how to make better decisions given the limited information and perspective that we have. So I'm on balance pretty optimistic that nobody expects us to land in one particular place. This is about, as I said, fine balance. It's sort of, tightrope walking in a way. But I think that on balance, people do a good job.
You just mentioned worker audits, which sounds like a slightly alarming term. Can you expand on that? What are worker audits? Are we talking about sort of surveillance of individuals? What are we talking about here?
Hardly. Look, I mean, first, let me just say, I remain somewhat astonished that this hasn't happened already, given the amount of work that we do. An audit committee about financials. Every quarter, I have to sign off that these financials are true and correct to the best of my knowledge, etc. And we do that a lot for operational efficiencies as well. How are you working in terms of safety and delivering these products? But we don't really have that much organized or audited information about our workforce. And I think a lot of the pressure around a lack of diversity or issues of ingrained or systemic concerns around systemic racism, etc., lack of diversity with women has basically driven questions around needing to shine a bigger light on, what exactly is going on. And I think this will continue more and more with concerns around mental health, around the role of corporations, not just thinking about the primacy of financial shareholders, but stakeholders more generally in an ESG world. We want to understand what's going on with the workforce. I will just say really quickly that we didn't have to all wait for public policy to step in, although that's great to get another perspective. But already we have a lot of technological apps and innovations that around really tapping into the provenance of the goods and services that corporations provide. How much water are you using? How much CO2 are you emitting? Thinking about worker happiness and engagement, whether it's a YouGov survey or Glassdoor or Blind or the Layoff, more technological apps. These are all innovations that are occurring. And I think through that, we'll get more information, not just about financial investors or regulators, but we'll also get more information about our customers and our worker colleagues. And I think that's going to make these organizations much more efficient.
You must have worked with some interesting CEOs. What are you looking for in a CEO, Dambisa, as an independent director? What do you expect from the CEO, and what kind of person are you expecting a CEO to be?
So my big word right now is flexibility. I think because of so many things that have happened, just as I said, in my 10-year period on boards, the financial crisis, Greek, default threat, Brexit, COVID, it just means that the CEO has to be quite flexible in some sense about what their role will entail. Now, having said that, traditionally, we've looked at financial acumen, we've looked at operational expertise. As this person managed teams? What kind of a leader are they? Are they sort of a positive, sort of energetic leader? Are they more subdued? All these things come in. And I think just to add on, going back to the point about boards themselves evolving to do a better job, one of the areas that I'm very interested in is really doing more probing work around ethics. One of the scary statistics is that in just 1 year, I think it was from around 2017 to 18, there were over 400 CEOs and business leaders that were fired from their jobs because of Me Too infringements. And so to my mind, that screams that we hadn't, as board members and as the people who select the CEOs and senior management, we hadn't done a good enough job probing the ethics. And so that's an area that I'm much more interested in. I think most people who will be in front of me for a CEO role will have the financial acumen. They will have managed teams. They would have managed through good times and bad. But getting that extra perspective around what kind of a person is this from an ethical perspective, and are they flexible enough to deal with a lot of challenges that are not yet settled, and their role in the changing world. I think those are questions that I'm particularly interested in for the new CEOs.
You touched on the Me Too movement. We've got a Thinkers50 session in a few weeks on activism, and the fact that organizations increasingly, boards, CEOs, but organizations in general, are going to have to take a position on things that perhaps in the past they might have sort of sat on the fence. Do you see that as a growing issue? And do you see, and I mean in terms of not just potentially customers activism, but also employee activism? I mean, we know a little bit about shareholder activism, so it's in a slightly different area. But do you think that's a growing area of concern or interest for organizations?
Yes, absolutely is. It absolutely is. And I think, on the one hand, there's something constructive and enlivening to be said about this broader role for corporations, born out of the sort of Business Roundtable statement in 2019. It's great that people feel that corporations should have a seat at the table for societal challenges and solutions, whether they are climate change or obesity or gun control or abortion, voter rights, etc. On the other hand, I don't have many levers as a board to effect change. I can really do a lot in terms of succession, and that matters. I can influence compensation. But more and more, I'm really just elected by the shareholders of a particular company. I'm not an elected representative of society writ large. So there's obviously some balance that needs to occur here. And I think maybe the other point worth making is that, yes, more voices in principle might seem attractive, but we have to be careful because we want to make sure that decisions are being made on as fulsome a picture as can be made, because sometimes sitting in one perspective or in one space, you take a certain view about what a corporation is doing, and that is not entirely correct if you took a broader lens. And maybe essentially what I'm saying in summary, and I wrote about this in an article in Bloomberg, is that it seems to me that for these organizations to run and add true value to society, we still need people who have a broad purview to be making decisions around risk-taking, around strategic direction. And if there are too many of us in terms of being cooks with all our different opinions that are not managed in a particular way, I think it can be misconstrued and can be potentially damaging.
Okay.
What about the role of the chairman, Dambisa? I mean, you alluded earlier to there's very different interpretations. The CEO chairman role is often combined, or usually combined in the States, but it's a very separate role in the UK, certainly. And it always seemed to me that the chairman's role, if you get it right, is really important, could be a force for good.
Huge, absolutely huge. I mean, I think of them very much as a referee. They're a referee between the board and management. They're a referee among board members. They are a referee also, especially now, between board members and stakeholders. They really take a lot of time to set the narrative. I think the best chair people that I've seen are ones that are not just led by what either a manager says or a board member says. They are constantly ducking and weaving to create an environment where we're focused on the most important issues for these organizations to not just survive, but to thrive, certainly through the 21st century. So I think that is a critically important role. Dare I say it, I think that this is an area that boards are taking a much more thoughtful look in terms of reflecting on who should be the chairperson of these organizations. And I think that's a good way to think about going forward.
Have you ever been tempted to be a CEO?
A CEO?
Yeah.
CEO, probably not. I have too many varied interests. But I love, my CEOs, many of them call me and ask for my opinions. I'm very grateful for that. And I think that it's, one of the issues pertaining to boards is that traditionally they were looking for people who came from the CEO or C-suite, CFOs. And someone like myself is considered an unconventional board member. And I think that world has changed because of geopolitics and pandemics, et cetera, rise of China, income inequality. And so that's great for me. But I mean, ultimately, I see why these CEOs still want at least probably 40% of their boards to have people who've been in the trenches as CEOs and CFOs. So there's definitely an added advantage to that.
I mean, you almost wonder whether the role can be. I mean, I know it has been combined traditionally in the States, but if they're the referee, if they're also the leader of the executive team, it's tricky to see how they do that. But that isn't the question I wanted to ask you. I've got a question coming from Aileen, and I think she's saying the ethics is, yes, it's important, but it's not taken seriously as a competency, and that leads on to my question, which is, I mean, we've seen a little bit of this sort of philosophers and ethicists coming through into some of the technology organizations as they, Google, not least, with interesting results, to see, as they kind of wrestle with ethical questions about AI and things like that. Is there a role for an ethicist or somebody who's an ethics expert on boards? I mean, in the same way that you have somebody perhaps who's an expert on technology.
Yeah, I think I'm certainly open to that. I wouldn't a priori say no, there isn't, or yes, there is. I wrote another article for Harvard Business Review some time ago, posing the question: do you need a technologist on your board? It might seem a no-brainer to some people. Oh, yes, we do, but actually, it really depends a lot on what it is that you're producing. Yes, technology will affect all of us. It will affect risks in terms of cyber. It will affect operations and potentially in terms of the speed of how we deliver our products and make those products. But obviously, being on the board of a company where technology is your bread and butter, like an Apple, is a very different proposition from being on the board of a utility, let's say, where it might help you do better the same thing. So I think that questions around ethicists, you would hope that everybody around the table, prioritizes this. I'm much more sanguine than the comment that was made about it not being taken seriously. It's absolutely taken seriously. It's now part of the metrics and many boards around how compensation is issued, how we evaluate candidates, how we think about succession. So it absolutely is something that, to my mind, is really full import in terms of not only running organizations, but also making delineations about what kind of leadership looks like. So I think that this is an area that is expanding, not shrinking. And I think there'll be lots more tools for us to evaluate ethical behaviors. I will just end up on one point and say that one of the complications, and goes back to what I was saying about not being judgmental, is that there is nothing that comes to the boardroom that is linear and obvious. And so even your comment a moment ago in passing about whether it's employees at Google or somewhere who didn't want to work because of certain things, these things always have hair on them, and their impact of making a yes or no decision has knock-on effects that are material, not just to the company, not just to a sector, but also to society in terms of job losses, in terms of impact on stakeholders more generally. So yes, ethics absolutely important, but I think we need to be a bit more thoughtful and reflective in understanding that there's not always one answer that suits everybody.
So you spent 10 years working on boards, Dambisa. How do you think boards will be different in another 10 years' time? Do you think they'll be completely different, significantly different? I mean, obviously, every board member will have to read how boards work by yourself. But how do you think they'll be different?
I think the sources of information will be different. I think that, right now we are, very much using metrics, that people might think are very 20th century. We think about, not entirely, but a lot of skew towards financial primacy because of Delaware LLC or company acts that have traditionally put primacy on financial metrics and financial performance. I think we're in transition now to look more widely, as I mentioned earlier, worker audits, thinking about other ways of evaluating returns that are above cost of capital, that aren't just financial. So I think that those are the sorts of things that I'm interested in. I think we'll also very heavily skew and debate the knowledge and the contributions of board members in years to come.
I know that you're very familiar with China and you've spent time in China. I mean, I'm fascinated to know how Chinese boards, we know it's a slightly, or perhaps a very different sort of model of capitalism, state capitalism, however we want to describe it, but they do seem to be doing quite well. Are Chinese boards completely different to our boards?
I wouldn't say completely different. I mean, you'll probably be aware that more and more of them now are adding on government representatives. Some people will balk at that, or we find that quite abhorrent if you're sitting in the sort of free market world of the US or somewhere in Europe. But I think that they are, in that respect, essentially trying to bring in a stakeholder voice that maybe is brought into our boardrooms in different ways, right? So it's through regulatory edicts, it's through performance reviews, it's through auditors coming into our rooms and saying, well, this is what the regulators care about, or this is what they're thinking about. And so that's one, to my mind, a big distinction, but that's not, as far as I'm concerned, too far afield from the fact that it's a state-led, state capitalist society anyway. and they have a very different objectives, sort of writ large, in terms of how they manage and organize their country.
But also, I mean, but state investment in the economy, Silicon Valley is built on, there was serious investment by the US government. And people forget this.
Absolutely. And look, there's wonderful books. Felix Rohatyn, who passed away, wrote a wonderful book detailing the role of the American government and public policy in rolling out the infrastructure network, Silicon Valley, as you pointed out, development of the internet. So, we should not lose sight that having a government that is data-driven, forward-leaning, focused on measured outcomes and not corrupt actually is huge value add for not just for corporations and for what businesses do, but also for society in its entirety. So absolutely. I mean, I think, you're right. It's very tempting to say us versus them. But it goes back to what I said earlier. We oughtn't be too judgmental. I think we do a lot of the same things, but maybe with a different emphasis.
Yeah. Okay.
Okay, Dambisa, we're out of time, but where does this work go next? You're working on your next book, I presume?
Well, you described this as a detour. I think I'll eternally be interested in geopolitical, macroeconomic, and investment discussions, and so I maintain that role. But it's part and parcel of capital allocations decisions that boards have to make alongside the management teams. And perhaps I'll just end off with the following. One of my favorite books is a book by William Thorndike, where he talks about companies that outperform not just the stock markets, but their peers are ones that actually do a great job on allocating capital and resources. And so there's not that far a big split ultimately from the big trends that I'm interested in, from climate change and income inequality and growth to allocating capital and thinking about what the world looks like in the years to come.
Dambisa, well, you can see why Dambisa has been shortlisted for the Ideas into Practice Award. Her book is How Boards Work. Well, her most recent book is How Boards Work. We recommend it for all those interested in the dynamics of the boardroom, and it makes sense of many issues that have remained slightly mysterious over many years, and there's a good kind of practical handbook if you're actually joining a board. So Dambisa, thank you very much. Next week, we'll be joined by Cherie Atchinson, who's been shortlisted for the Digital Thinking Award, and we hope you can join us then. So Dambisa Moyo, thank you very much.
Thank you.